Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top stories. Strong global cues lift the Lal Street. Sensex at a 3-month high. Nifty reclaimed 16,900. All sectoral indices ended in the green, led by IT, financials, metals and realty. Bajaj Twins surged 10% after Bajaj Finserv board approves 1:1 bonus and 1:5 stock split for shareholders. Profit surges 57% and total income for the first quarter rises 14%. More pain ahead for Zomato. Valuation Guru Aswath Damodaran downgrades the stock valuation to 35 rupees from his current prediction of 41 rupees. Damodaran's assessment expects a potential downside of over 19%. U.S. economy shrinks for a second consecutive quarter amid inflation, higher interest rates, which could fan fears that the economy is already in recession. 5G spectrum auction nets big bucks for the central government. Reliance Jio and Airtel lead the bids. Expect super-fast 5G services in a matter of months. Massive Atmanirbhar push by the Indian government as Western nations corner most of the supplies of Monkeypox Vaccine. ICMR invites bids for vaccines and diagnostic kits. It was a terrific Thursday on the Lal Street. Markets ended the July series on a strong note. In fact, it was the best series in 10 months. In a stellar rally, Sensex surged over 1,000 points to end at 56,857. Nifty also jumped over 280 points, shutting shop a few points shy of the 17,000 mark. It was the Bajaj Twins which led the gains today. Bajaj Finserv gained over 10% after the company's board approved a 1:1 bonus issue and 1:5 stock split. Other blue-chip gainers included Tata Steel, Kotak Mahindra Bank and SBI Life. On the downside, Bharti Airtel, Shree Cement, Ultratech Cement, Dr. Reddy's Labs and Cipla were the top Nifty laggards. Food delivery giant Zomato made a stellar debut on the Lal Street a year back, and since then it's been a journey downhill as investor euphoria has waned. The wizards of the Lal Street had predicted the fall, questioning the company's profitability plan. Will there be more trouble ahead for the company? That's the big question.
Shares of food delivery provider Zomato are trading below 50 rupees today, leaving investors worried about the outlook of the stock. Zomato was one of the new age tech companies among the likes of Paytm, Nykaa, which listed on the stock market last year. Despite the buzz around these stocks, there were those who were skeptical. And one of them was the Warren Buffett of India, Rakesh Jhunjhunwala. In a perfect I told you so moment, the shares of Zomato have crashed over 60% since their listing on July 23, 2021. The big bull had warned investors on the future of the Zomato stock. At the India Today conclave last year, Jhunjhunwala had expressed concerns over the valuation of the newly listed companies, including Zomato.
पानी पानी दूध दूध और अभी आप बोलोगे कि Zomato मत लो, गधा है, तेरे को अक्ल नहीं है। मैं 15 से बोलता था यूनिटेक मत लो तो गधा बोलता था। तो फिर क्यों बोलने का, देखने का मजा देखो।
Unfortunately for Zomato, Jhunjhunwala's prediction has not just come true, but also at a faster pace than he had anticipated. And it does not end there. Damodaran, a professor of finance at New York University, often described as Valuation Guru, now has a new fair value for Zomato that suggests more pain ahead for the new age stock. Just over a year after Damodaran pegged Zomato's value at Rs 41, now sees the stock at 35 rupees. He suggested that if prices of shares plunge to 35 rupees level or below, it will be a buying candidate. Another ace investor Shankar Sharma said the stock had erred by listing at a high valuation. In a tweet, Sharma quotes Big B's Diwar dialogue to describe Zomato stock. The veteran concluded that Zomato shares were a game over on the listing itself. So now the big question is it game over for Zomato shares? Have Zomato shares met their doomsday? Well, brokerage house Jefferies is still bullish on Zomato. In a note it said, "Night is darkest just before dawn," and added that the stock was its conviction buy. he has a target of 100 rupees on the counter, which translates into a potential upside of 144% from current levels. Bureau Report, Business Today Television.
The metaverse, 5G, VR all sound like fascinating concepts, but these top themes from the tech world can't be discussed without the shadow of a slowdown looming over the tech industry. Our tech editor Ayush Alawadi caught up with the CEO of Tech Mahindra, C.P. Gurnani. Here's what he had to say in this exclusive conversation.
Sir, as an industry veteran, the entire tech community that's watching would love to get your thoughts on a more general but an issue of pressing concern, so to speak, which is what's happening in the world, especially with talks of some sort of a recession coming our way in the next few months, and there are concerns about it globally. Tech titans have voiced their concerns as well. With your view on the entire tech sector, so to speak, do you think it's a cause of concern? Where do you stand when it comes to talks of financial concerns in the coming months to come?
You know, so let's separate it as two different questions. One is the economist question, is it a slowdown or is it a recession?
Absolutely.
The second part of the question is, what role or what can be an impact for the technology sector? So the first part, I think, my own assumption is leading indicators like housing prices, unemployment, or, occupancy of restaurants, hotels, or airlines indicate the consumption has not really slowed down.
Correct.
Yes, inflation, energy crisis, or supply chain will necessarily create bumps in the journey.
Sure.
Right? Now, whether the bumps are short-lived or relatively long-lived, the consensus of most of my customers is that it will be a slowdown, but it will be for a much shorter cycle. Now, the second part is on the technology, role of technology. I think we all saw, even during the pandemic, is that digital consumption is only increasing. And digital consumption is also driving a level of business transformation which is unprecedented. I think that journey is still not complete. So digital transformation and business transformation will carry on despite of the slowdown, and Tech Mahindra is very, very closely working with our customers in various verticals, and we get this playback directly from our customers.
Shares of biotech major Biocon slumped over 5% today after the company reported an earnings miss on all fronts. While profits surged 71% year-on-year, margins were under pressure. We're now joined by Shreya Sambe, the Deputy CEO of Biocon Biologics. Shreya, thanks for joining us. Take us through, some of the factors at play this quarter, because we did see a, fantastic jump in profit despite the fact that you've had several expenses pile up.
You're right, Ava. I think this has been an extremely successful quarter with a year-on-year growth of 29%. And if you recollect, last year, first quarter, we also had a one-off sale of our COVID portfolio to the extent of 90 plus crores. Now, if you were to leave that aside, the growth in the business has been 46% over last year. So it's been a remarkable growth. And a profitable growth at that, with a growth in our core EBITDA margins of over 30% year-on-year as well. Core EBITDA, over absolute numbers, the core EBITDA margin is at that 36-37% as before, which has been a very consistent performance despite the growth in revenues. So the growth has been extremely profitable, reflected very nicely in the core EBITDA, which is actual performance of the business. Net of any R&D or net of any one-off costs like the foreign exchange adjustments or mark-to-market losses. So yes, a very strong performance despite increase in personnel costs because of the increments, or also because of any other increases that we've had even in the business overall.
Okay, let's talk biosimilars, and we have seen, a lot of traction when it comes to some of your strategic alliances, including, of course, the key acquisition that you made, and it looks to, be heading towards closure in the second half of the year.
Well, it's been a very, very important partnership for us, which has been over a decade, and we are at that stage where we made the decision to lead that partnership by taking charge of that business and becoming a vertically integrated company. So we're very familiar with the business, very familiar with the people. We had clearly complementary capabilities, and with this acquisition now moving to a stage where we're looking to close it by the end of this first half of the year, on getting on with the complete integrated entity towards the second half. I think we're very nicely poised to not only have the revenues accruing to us with the economic benefit, but also build on the capability of the commercial front end, which is something that we would have otherwise had to organically fit out. So this is really a very positive outcome of that collaboration, which will not just help us commercialize the existing portfolio, but actually helps us set up for all the other non-partnered programs, the new assets that we are bringing to the market. So the Viatris acquisition, of course, is a very important one, and places us in a very different league, catapulting us to another level altogether.
Okay. Shreyas, while we have you, I must get your expert take also on the growing concern around the spread of monkeypox. And yes, while there have been efforts being made to source a vaccine, contain the spread on account of regulatory authorities, if you could just share with us what you feel the risk is on this front, and in any way in which perhaps Biocon would be involved here.
Well, I don't have any insights to share. Let me put it this way at this time. But needless to say, now that they've been able to isolate, the virus, and there is progress being made in that direction, hopefully we will have a vaccine and an ecosystem which can help avoid a spread, which of course has been declared by the WHO as an emergency in a way. So we're hoping that it doesn't spread, and whatever role that Biocon Biologics can play, we'd be happy to. But nothing that I can add as insights beyond that at this time.
All right. Shreya, thanks so much for joining us and taking us through some of the latest developments there. The government has pegged its disinvestment target for this financial year at a modest 65,000 crore rupees, a sharp reduction from last year's target. The road to disinvestment has key timelines set for various companies. My colleague Karishma Sudani joins in with a special report on the government's divestment roadmap.
Well, government has pegged its disinvestment target for this financial year at a modest rupees 65,000 crore, a sharp reduction from its last year's target of 1,75,000 crore. The road to disinvestment has key timelines set for various companies. To start off with BPCL, in fact, government had to postpone its sale plan of BPCL due to current market conditions. We are being told that Department of Investment and Public Assessment is currently reanalyzing the process and shall restart sale process in the next financial year. Let's also talk about Pawan Hans and Central Electronics. Now, these two companies, the sale process for them have been put on sale as they are awaiting certain legal modalities. In fact, sources have also told us that Centre is awaiting to take a decision post a final word from NCLAT is expected, especially in the case of Pawan Hans. Now, on top of the list of the stake sale is, of course, the much awaited IDBI Bank. Government and LIC could sell off more than 51% stake, and expression of interest for this could be announced by mid-August. Sale process of Concord Shipping Corporation of India and BML could take off much before March 2023. Now, despite a lag in certain cases, be it the land licensing policy in Concord or the issue of demerger in Shipping Corporation of India, government is really hoping to have an affirmative response by this year end. As per the official numbers, and the one that the DIPAM is keeping a track record of, currently government has been able to collect disinvestment receipts worth rupees 24,543 crore. This is almost 1/3 of the disinvestment target that it has pegged. Of course, the winner has to be LIC with its major contribution. Another key aspect of DIPAM is the dividend receipts. For the current financial year, they have already collected about rupees 3,000 crore dividend receipts. However, time and again, Finance Ministry and DIPAM has said that the role of disinvestment is and cannot be limited to just about targets and collecting money, but it's a bigger goal, and it is about making good deals and completing transactions to make the asset more valuable.
It's a cash haul the likes of which few have ever seen. Nearly 50 crore rupees found in Indian currency at 2 residences of Arpita Mukherjee, a close associate of West Bengal Minister Partha Mukherjee. And that's not all, as this report shows.
On the day the Supreme Court of India shot down all legal challenges to its powers, the Enforcement Directorate proudly announced an eye-popping pile of laundered cash that it has seized. Wednesday evening, investigators of the Enforcement Directorate forced their way into this flat owned by Arpita Mukherjee, who is currently in the agency's custody. Hours later, cash counting machines were brought in, giving all an idea that something big was underway. This was the scene inside the house, a bundle of pink surrounded by packets of currency and boxes of jewellery. It reportedly took the ED officials 10 hours to count the stash. Ultimately, the pile of cash totaled 27 crore 90 lakh rupees. The 2,000 rupee notes were bundled into packs of 50 lakh rupees each, while the lower 500 rupee denominations were in bundles of 20 lakh rupees. 3 gold bricks of 1 kilo each were found, valued at around 1 crore 50 lakh rupees. 6 heavy gold bangles of 500 gram each, a gold pen and around 2 kilos of gold jewellery were also found. This was in addition to the shocking haul from another of Arpita's residences on Saturday. The agency had found 21 crore 90 lakh rupees in cash, 56 lakh rupees in foreign currency and gold worth 76 lakh rupees. Meanwhile, authorities have reportedly uncovered information of yet another apartment owned by Arpita in the Chinar Park area near Kolkata Airport, leaving them wondering whether they will have to spend another night counting cash. Bureau Report, Business Today Television.
The central government has stepped up its drive against the monkeypox virus. Though India currently has just 4 confirmed cases of the disease, the process to create a vaccine for this rare illness is underway. There is also talk that the existing smallpox vaccine may also prove to be effective against this disease that has been declared as a public health emergency by the WHO.
For a world emerging from more than 2 years of COVID-related mayhem, the monkeypox virus has emerged as a new scare that is rattling nerves all across. And while there are no reports of death due to this virus in the current outbreak, the rash that it causes is the most distinctive symptom and reason for the fear that it is causing. It is a virus which was first discovered in humans over 5 decades ago, with cases reported mostly in parts of Africa and some international travelers. Recently, the disease has been spreading in the United States and some other countries where it wasn't seen before. This has meant that most of the world is not prepared to deal with this severe outbreak. Currently, just one company, a small Danish firm, Bavarian Nordic, manufactures the vaccine. US federal agencies have helped develop the vaccine and have kept a tight lid on its supply. Faced with 4 confirmed cases in India, the Indian Council of Medical Research has invited expressions of interests from manufacturers to develop a vaccine and diagnostic kits. The last date to file applications is the 10th of August.
India should be alert. The alertness is that yes, it is here. it may be surfacing more and more. So the public needs to be educated, which is going on. Actually, the government has issued certain guidelines.
According to the US CDC, there are 20,638 confirmed cases of monkeypox. The worst affected is the US, with European countries like Spain, Germany, United Kingdom and France completing the top 5 list. Meanwhile, the World Health Organization has cleared the smallpox vaccine for use against monkeypox.
Several countries with monkeypox cases have secured supplies of the MVA-BN vaccine, and WHO is in contact with other countries to understand their supply needs. WHO urges countries with smallpox vaccines to share them with countries that don't.
Several states have tightened monitoring at international airports. Hospitals have also been earmarked for suspected cases, all in hope that the disease does not turn into a pandemic like COVID did. Bureau Report, Business Today Television.
India's solar power manufacturers have been taken aback by a recent ruling that allows for concessional imports of crucial solar power equipment. Sources say the Finance Ministry is looking at plugging the leak, which has the potential to undermine the Modi government's Atmanirbhar push in solar power.
The Ministry of Finance is examining a recent ruling of the Customs Authority allowing a Telangana-based solar power developer to import photovoltaic modules at a heavily concessional rate of 5% against the prevailing basic customs duty of 40%. According to industry sources, the result of this move would be that 40% duty rule will be circumvented by unduly exploiting a provision in the Customs Tariff Act, which allows 5% import duty if an entity imports all components for a specific power project contract. Industry players say this flies in the face of the central government's efforts to boost local manufacturing of solar power equipment and reduce the outflow of precious foreign exchange to China. The Modi government has set ambitious targets to ramp up solar power installations in India, targeting an increase in cumulative capacity to 300 gigawatt from the current 57 gigawatt by 2030. Solar photovoltaic modules are the biggest cost element of a solar power project, accounting for as much as 60 to 70% of the total expenditure. The government has even introduced a production-linked incentive scheme to ramp up domestic manufacturing capacity. Sources say the Revenue Department may need to amend the customs tariff rules and do away with the project import option, as the loophole can be unduly exploited to the detriment of domestic players. Bureau Report, Business Today TV.
And that's where we leave it on the show tonight. Thanks so much for watching.